Now, following Nigeria's Monetary Policy Committee's decision to cut the benchmark interest rate to 12.5%, Ahmed Jinad, a research analyst at Meristem Securities, now joins me to discuss the implication of this move on Nigeria's equities market. Ahmed, a pleasure to have you join us on Closing Bell West Africa. So we did see
Thank
the
you.
first cut since March 2019. How do you reckon the markets will respond to the MPC's decision today?
Well, good evening. I don't think the market will react significantly, or will see a big impact on the market. Really, I think in terms of what signals the MPC is trying to give. Like you mentioned, since March 2019, with the last time we actually cut rates, the MPC cut rates to 13.5%. You could remember the CBN governor at that at that meeting saying that more than anything, it was to signal to the market a shift in stance towards an easing stance, really an accommodative stance towards the economy. But we all knew what followed after that rate cut. We didn't see any significant impact. I mean, especially from credit to the private sector, which is what you would expect a cut in rates to do. Because the overall idea is to stimulate growth within the economy by directing more credit to the private sector. We did not see that happen. And instead, what we've seen is the CBN taking us into an era of unconventional policies to achieve the accommodative or what I'll call the pro-growth stance through its policies, its loan-to-deposit ratio policy, the segmentation of the fixed income market to make sure that to ensure there is a lot of liquidity within the banking sector that should be available for lending to the private sector. So in terms of market impact, really, I don't think the rate cut signifies anything new from what we already know. We already know the CBN and the MPC have been trying to encourage growth within the economy, and that was what informed all these policies that I mentioned. And I don't think a rate cut to 12.5% will significantly change that.
Ahmed, an era of unconventional policies, you called it. We did also hear some, the CBN governor make some pronouncements which came as a surprise to most analysts who had been predicting that the MPC would maintain status quo. The CBN governor also said that Nigeria may not slide into a recession this year. How do you reckon investors will respond to this news, which I consider maybe happy?
I mean, it is happy if you take it on face value, but if you look at the realities, if you look at the variables that drive growth, I don't think a lot of us will share that optimism with the CBN governor. The truth is that to enter a recession, we need two consecutive quarters of decline. I think Q2 2020 is almost a done deal that the economy will contract in Q2 2020. What I feel the CBN is looking at, or the MPC is looking at, is that, okay, given that we have eased lockdowns now, I think there's a chance that, okay, if we do the right things, maybe we can avoid the economy contracting in Q3 2020, which I think is what he's targeting by saying, oh, maybe we can avoid the recession. But the reality is that when you look at the real sector and what has been going on there, although we have relaxed lockdown, but it's not like everything, the economy is kicking in full gear. If you speak to a lot of operators in the real sector, costs are going up, inflation is going up. And the fact that we have a lot of restrictions in terms of movements of goods and services across the world, don't forget that the supply chain is global, it's not domestic. Many manufacturers in Nigeria rely on inputs from all across different parts of the world. And the movement of such goods right now and materials right now has been seriously impaired. And as a result, what you have is that the costs have gone up significantly. You also want to look at for those that rely on import of raw materials as well. There's currently an FX scarcity, which we are still trying. The CBN is still struggling to address. And of course, what that means is that it translates into higher costs of production. And so you look at all that, and I don't see how output levels will not drop in Q2 and in Q3. Let's not also forget that there's still a pandemic out there. And until we have a vaccine, the best we can have is a way to cope with the virus until we develop a vaccine. And the timeline for that, I think the most optimistic timeline is looking at full year 2020, and initial estimates put it at Q1 2021. So you look at that and put it together and you say, how are we going
Definitely,
to
many variables to consider there.